Thank you for coming to the Startup Portal Equity Crowdfunding Series. My name is Rick Leinbach, founder of Startup Portal. And most people don't have an understanding what equity crowdfunding is. People have heard of crowdfunding, but equity crowdfunding is where you can basically be part of an investment in equity crowdfunding. So today we're going to tell you a little bit about the crowdfunding, a little bit about ourselves, and show you some examples. So hopefully you can get some aspects of equity crowdfunding as an entrepreneur looking to raise capital, or potentially as an investor. So, like I mentioned, my name is Rick Leinbach, a product of Maryland. Basically, I've been an outsourced consultant, CFO, for the last 10 plus years. And my experience is really expertise in helping publicly traded companies, private companies that are growing, energetic, and operating companies. So that finance experience plus the team we have at Startup Portal, we certainly have a nice financial background, and essentially that's our lap land. And with Startup Portal, it's a derivative of our consulting company, Carrollton Partners, and it's really designed to be that affordable solution for companies just coming out, where we can teach you how to start your business for a very low cost on a monthly basis as you get up and running, and help you with your business plan and financials, and really look into what type of funding you may need. And here at Startup Portal, we have a couple locations. We're trying to bring the tools that we need, such as co-working, obviously podcasts, videocasts, and software resources that educate people that you can really scale your business, grow your business for a nominal amount on a monthly basis. And as I mentioned, we have CFO for services, accounting, bookkeeping, advisory, consultants, business writers, really to help you, on that fractional basis, especially as you need to get started. So let's start with a couple examples of equity crowdfunding. So Beside the Tracks Brewing Company is based in Conyers, Georgia, and they're essentially establishing a new brewery, the first one in Conyers. So they were looking to get $65,000. And their fundraising started about, I think, less than a month ago, and they hit their goal just recently and exceeded their goal. And essentially, this is crowdfunding, but it's not ownership. It's what's called revenue share, where you put in $100 and you're going to get 160 back. Now they have that term at about 5 years. However, it's based on revenue. So if they hit the mark on their revenue and exceed their budgets, you could actually get your return back sooner. And what I really like about crowdfunding is it's in Conyers, Georgia, where it's their first brewery in the town. So folks in Conyers, Georgia, have a pretty good incentive to basically help fund it, and obviously will get paid back as they essentially go to the brewery and have a few beers. So I really like that about crowdfunding. Another example, we shift over to real estate. Mr. Crowd is a funding portal. I should mention, we'll talk about it soon, but there are crowdfunding portals, established portals you have to go through to invest. So Mr. Crowd is a portal where you have real estate you can invest in. The company here, Skywide Real Estate, was looking to raise $50,000, and essentially you can put in $100 unit price for an investment. It looks like this is an LLC, which is not uncommon in real estate because you want to push the tax losses through to the individual. But it's a Class B membership, which probably means that you kind of take the second position. But there, they've been able to raise the funding they need to build their project overall, and it looks like they're looking to get a dividend yield about 10% for the investors. So just an alternative where you can invest in real estate without having to have 20% down, go to the bank, and worry about whether the toilet is flushing on a Saturday night when you get a call from your tenant. Think about it that way. So what is equity crowdfunding and the business model? Well, traditionally, if you have an idea or an adventure, you go to the bank or you go to a private equity, have the conversation and say, hey, this is my plan and I need funding. Can you help me? With that, it's an extensive time process. In addition, with the banks, it's risk-based. The banks have very low interest rates, but they expect very low risk, to combine with that. So now equity crowdfunding comes along, and now you're able to take the crowd and essentially be that fractional private equity. Now, when you talk private equity, usually there's a higher expense to it, and that's still the case here. However, it's something that may fit your model, especially in the early years, right? If you build up your equity and your base till you get to a position where you're bankable, you now go to the bank and essentially borrow at a preferable rate, and essentially solidify your business. Now, let's get into a little bit of the rules of equity crowdfunding. I won't bore you too much, but it is, the ownership of shares, it's debt, it's revenue share, which is a form of debt. So various types of I want to say security vehicles. It's available in the U.S. and worldwide, but the worldwide have different funding portals. So U.S. investors, typically in U.S. portals, can only invest in those. And there are about 60 crowdfunding portals. Some come, some go, and there are about 10 are the strongest overall. Now, there's some regulation with it, with the Securities and Exchange Commission. You'll hear the SEC every once in a while. They regulate it, and also it's regulated through FINRA. And FINRA is the organization that really regulates stockbrokers. So it is part of the securities industry and very well regulated. Now, you can see from the chart that crowdfunding is really heavy in California, Texas, New York. However, it is coming across the country, and it really has over the last few years. And you can really raise up to $5 million in capital in what's called regulation crowdfunding, Reg CF. Or if you're a larger company or even a public company, you can raise on Reg A up to 75 million in capital, which we'll show you an example of that later. Now, let's talk a little bit about what's it mean with regards to crowdfunding and the type of securities. Common stock is just like being a shareholder in Disney or GE. You're a shareholder, but it's a private company with equity crowdfunding. Safe agreements, which are you'll see those, they're a bit common, especially in software or high tech development companies, is really an agreement to allow you to participate in the offering, but not lock you in or not lock the company in, or I'm sorry, the investor in at a set price, knowing that down the road you're going to need a next level of funding, and it's better to price at that point. So the investor may get a discount on that pricing. So really, it's safe, but it's really meant to kind of protect both sides and keep out of negotiations at a very early stage for a company. Then there's debt agreements, which is traditional debt. We'll show you an example or two of that, where you actually have a portal where you can borrow. Smaller companies usually can borrow and pay it back over time. And then I mentioned revenue share before, one of my favorites, only because you can participate and really, if the company is strong and you do the right research, you could get your money back sooner, hence your return is larger, and then you can reinvest in another company. So rev share I really like, and I think it does help companies in some respects avoid getting into the ownership and the equity and what's my value, et cetera. Now, with the funding portals, there's all kinds of sizes and flavors of portals. Start Engine, WeFunder, Seed Invest, Main Investor, big ones. We looked at a sample of Mr. Crowd, and that's on the real estate. So just various types of portals, and we'll talk about how do you look at them in a moment. So your business plan comes along, and essentially you have startup help you or look at your financial projections. You've got a business plan, or we help you with the business plan, and you think, okay, I need a certain amount of capital, whether it's real estate, investment, software. What portal is best for me? So we like to use comparable data because there are so many samples out there of what type of portals to use, what type of companies are out there, and how much they've raised. So we have that data that we can look at and say, does this fit for your venture in going down the equity crowdfunding path? Now, certain things that as you build your equity crowdfunding plan, you have to think about in telling your story is like technology cost, license agreements, debt agreements. So you really have to things that you really don't think of on a day-to-day will come into play as you talk about your venture. And really, since it is a venture that has risk, you do have to define the risk in that. One of the things we profess is know your numbers, having solid financial projections, What we like to do is give you the metrics to speak to your model, but then help you with the balance sheet, cash flow, income statement, which are more traditional accounting, um, you know, traditional accounting formats. Now, with that said, when you step back and really analyze your business plan, make sure your personal side of it doesn't come into play. Make sure you have some good, good runway personally, that it's not going to potentially impact you when you go down the crowdfunding path, because you are basically now bringing on potential, investors, partners, debt holders, etc. Now, does crowdfunding fit? If you have a venture that needs upfront funding, let's say for a prototype, and you have people excited about it, you're talking to people, and you're like, hey, that fits. I think people would be interested. I think that's important to know. Hey, is this a scalable model? Can I grow this to be a substantial opportunity for an investor and for myself? So that's where crowdfunding could fit. However, you really have to think about, okay, if it is a scalable business, it's going to grow, and I'm going to need a lot of capital and investment to grow that business, I have to be careful that if I know I'm going down to private equity, I don't want to get in a position where doing crowdfunding will hamper my ability to knock on the doors of private equity companies, because truly they have substantially more in the funding, as well as directional and expertise to take you there. And then return to investors. Really, one of the things I look at when I talk about rev share is you get liquidity back from an investor standpoint. You're already getting your money back as soon as they're generating revenue. And just make sure the investors understand that if you're a high tech company, your liquidity may come in 5 years when there's an exit strategy or somebody buys your company. So really different perspective for how you're getting your money back and generate either profitability or an exit strategy. And then researching the portals, just making sure that I have a real estate project for 50,000. Mr. Crowd fits well. They've been successful. They have a community there, and I bring my own community. Expectation is you have energy behind it as well, and then we can raise the capital needed for a project. On the start engine, for example, you may have an opportunity to invest significant cash invested. You just have to make sure you tell the story, go through the process, and make sure the portal's a fit for you. As another example, we'll go through a couple in a moment, but Mainvest, which had the B side, the tracks, they specialize really, from what I've seen, in restaurants and breweries, and they've been successful, and it's more of a rev share or debt offering. So lastly, until we look at some examples, Mr. Wonderful has really validated the industry through Start Engine. And really, if you'll see the commercials out there, but really showing that the industry and crowdfunding is evolving, doesn't mean it's a fit for everybody. And I say that in the aspect, just look at your plan and really figure out, hey, does this work for me? And will people be interested in it? So a couple examples. Store On Technologies is through Start Engine. They've raised $1,070,000. And essentially, I think the $1,070,000 was the cap that you could raise, a little over $1 million, up until they moved the law last year to $5 million. Now, this company has a $28 million valuation. They had 1,500 investors, average $250 in investment. So not significant dollars invested, but there's energy behind this company as they have a battery solution, for energy storage. So it's technology. Typically, the valuations are higher here, but you can see there's a crowd behind it. So here's Pepper's Landing, and essentially, with Pepper's Landing, they have raised $145,000 through 36 investors. Their goal was 50 to 250, so they're kind of in the middle part of that. You can see they're in Maine. They have a restaurant, I think some supply chain. So I hope the crowd is, out of the 36 investors, hope it's in the community that's there. Again, getting that support to help the restaurants. Another restaurant through Honeycomb is American Gothic Pizza. 25,000 from 12 investors. Maybe friends and family, maybe people very interested. They were looking for 25,000 to build a pizza trailer. And essentially with this, the folks had a family business and gentleman got displaced. Now he's in the pizza business. Well, guess what? With crowdfunding, you have the ability, if you're generating capital here and returning to investors, there's nothing to say you can't go back and do another 25,000 for another pizza truck. Obviously, you get to a point where you could do a restaurant or actually go to bank funding. Your cost of capital is cheaper, but you can see that from crowdfunding allows them to really get started. So Liquid Piston, it is a Reg A, which is the higher level, can raise up to $75 million. They've raised $17 million, and they're looking to raise 28. Their valuation is $69 million, which is pretty hefty, but they've got 7,600 investors through Start Engine. We'll get a little sense of the marketing effort involved in talking about a company. Usually there's a video involved.
The X-engine from Liquid Piston represents a quantum leap in combustion technology. The reliable, fuel-efficient rotary engine is now taking on the next challenge in power for propulsion: flight. This UAV was constructed as a demonstration for the US Army, with the engine operating on jet fuel, similar to JP-8. Based on the company's patented HC-HC thermodynamic cycle, the X-engine features an exceptionally high power density of up to 1.5 horsepower per pound and with only 2 primary moving parts. The engine works with a motor in a parallel hybrid configuration. As the UAV approaches its target, the engine can be switched off. The vehicle then switches over to an electric-powered quiet cruise mode. When the operation is complete, the engine is restarted mid-flight and the vehicle returns home. Liquid Piston. Power reimagined.
So you can see from Liquid Piston, the video tells helps tell the marketing story. If you go onto the Start Engine website, you will see a lot of disclosure about the company and the history of it and what they're trying to do and the risk and uncertainty. But really the power of the story is that the creativity of the drone is the selling point. And obviously people have gotten behind it. So, and one of the aspects of anything you do in business is you like the close date. Have a close date gets things done, and they're offering closes on June 25th, which is common. Ironically, not to say that they can't go back and down the road and do another offering, or because you can go up to 75 million in a 12-month period. So just certain dynamics to it, but good example of how projects get bigger. Bigger projects are out there that are available when companies are needing capital or starting to grow. With regards to equity crowdfunding and portals and being successful with it, one aspect you want to be careful is, are you comfortable with shareholders or investors or debt holders? Can you sleep at night? So just, the one aspect to think of as you're going down this path. You have to research the portals. Obviously, we can help you if you need information on a portal or industry. We're tracking that and can give you good samples. The key with the samples are find the companies in your sector or industry, how much they've raised, average per investor, number of investors, so you can really see what the sentiment is for that type of industry. The small ones like Honeycomb, vary, but they've been successful with to help smaller businesses just get that little bit of capital they need. Marketing, as you saw from the video, is big in the crowdfunding industry. You have to listen to the experts, depending on the portal. Ask questions about marketing. What happens with the marketing videos and the website when you launch? How much do you need to spend on advertising through, say, Facebook or Twitter? Because you're allowed to do that. However, the more you advertise, the increase in your cost of capital, which is kind of a hidden cost, if you ask me, when you look at it. And then one of the things that we profess when working people with financials, always think about your second round of financing when you need your first. As I mentioned earlier, it's great to do a prototype of a product and get 1,000 investors and have the money to do that. But if you need 10 million to go to private equity, you may have trouble knocking on doors when private equity may not work with you. So you may be relegated or stuck in the equity crowdfunding world. Not a bad thing, but it certainly can be a little more expensive as well. Now, pluses and minuses of crowdfunding. This is a nice alternative financing to business. If you go out there and look at the web-based debt lenders, Um, Typically, what I see is they're willing to lend you money, especially if you're generating revenue, but they're going to say, "Hey, I want you to pay it back in the next 12 months," and your payback rate is about 40 to 50%, just depending, especially if it's in less than a 12-month period. The positives here are individual investors now get to be part of the crowd, private, essentially public private equity, let's say, so they can participate. The ideas we saw with the innovation that comes about, people have the opportunity to get the funding for ideas that maybe 20 or 30 years ago took a longer path to get there. And one of the things that I think the sentiment nowadays, with the economy not being as strong as it once was, the high gas prices and every other aspect that people are dealing with, crowdfunding may be an alternative for companies, especially solid companies that may go to banking and get pushed back, or the banking may tighten the credit. Maybe a good alternative in the future, as we saw from a couple of examples. People have been successful. It's kind of the negatives. Cost of capital is expensive. Failure, right? The risk of failure and what happens with your enterprise. Obviously, with any venture that happens, but now it happens with other people. It's something to think about. You have to be comfortable with. With crowdfunding, the valuation of businesses is somewhat higher than a private equity company or a public company. You have annual reporting requirements. Here we help companies, obviously, as they go through the process of crowdfunding, but also at year end, help work with the auditors, accountants, put the financial statements together. So it is a process, and there are costs to it. And then sort of the burden of investor management. That aspect of do I want debt holders, investors? Am I comfortable that they're calling me once a quarter expectation, once a quarter for an update? The old how are we doing, which is fair. Obviously, with the rev share, we have investors that can come to the restaurant and see how you're doing. That's a win-win for both, but just making sure you're comfortable with it. So, where's Startup Portal heading? For us, we see two aspects. One, helping entrepreneurs get the business plan, think about where they're heading, get examples of others that have been successful. But also down the road, we're going to hopefully bring investors in and be part of our community where we can have solid companies vetted that we can help them through the process of, whether it's crowdfunding or bank financing, et cetera, or debt financing, other aspects to really making a strong community where, there's trust on both parties. So please, if you're interested, go to our website, get on our mailing list, and we'll be glad to communicate over time. For Startup Portal, we've got a couple of locations here in Maryland. Our base is Westminster, Maryland, and really we're an outsourced, accounting and finance organization where we provide services, cash plan. We talk crowdfunding, projections, even locally we do co-working space and allow you to really use the tools we're using, such as this video, to tell your story and educate people. And really that's part of our goal today. So this series, we've got 3 more through the month of June. And hopefully we'll switch it up a little bit, maybe less of me talking and bring some others in to share their stories about equity crowdfunding. And, again, keep to the point of, does it fit for you? And there are pluses or minuses. So I thank everyone for watching, and off we go.